2024 has been a remarkable and unprecedented year for investors because understanding the financial markets has been so difficult in 2024 because what we have seen in 2024 has never happened in the financial history, at least in the recent history. So in this video, we are going to dive into what happened in 2024, why it happened, and how this is going to impact going forward in 2025, especially in the light of Federal Reserve monetary policy, as well as Trump's fiscal policy going into 2025. So let's get into it. This has never happened, guys. Okay, so gold and S&P 500 has been majority of the time negatively correlated, but in 2024 we have seen the correlation between S&P 500 and gold has been the highest in positive 91%. So if you look at this chart, you can see that pretty much in the last 45 years we have seen both have been negatively correlated most of the time. But in 2024, this has been the highest. The correlation between the two asset classes has been the highest, 91%. So this also gets very unusual where the 10-year treasury yield has been climbing up since Federal Reserve started cutting rate back in September 2024. Okay, when Fed started cutting rates, indicating that they are worried about the unemployment data, and then they were worried about the financial conditions and started stimulating it by cutting rates, the bond market has gone in completely different direction. So since then, we have seen the 10-year treasury yield has been rallying and it is now approaching 5%. And gold has beaten S&P 500 from a return perspective. Gold has rallied 30% in 2024, and this is the best year for gold since 2010. So if the central banks, if the Federal Reserve is calling for soft landing, why the gold has been rallying? That's the question. So again, this has never happened in the recent financial history. So we have seen gold, we have seen 10-year treasury yield, and we have seen US dollar on the DXY index. All of them has been rallying at the same time. Typically, we have seen they don't rally at the same time together. So if you look at this chart, we can see that in the later part of the 2024, since September going forward, we have seen gold and treasury yield and also the dollar on the DXY index has been rallying, and this move has accelerated in the later part of 2024. So that is something completely anomaly. It has never happened before. So that makes it difficult for us to predict or assess how the markets are going to move in 2025. So just to give you another perspective, the US dollar and gold has been traditionally, historically, inversely correlated. Okay, when the US dollar gets expensive, the gold falls. When the US dollar gets cheaper on DXY, the gold rallies. Why? Because the gold price is set in US dollar. So if the dollar gets expensive, of course, you need more dollar to buy gold. Okay, that pushes the gold price down and vice versa. But in the later part of 2024, we see both gold and US dollar are rising at the same time. That is very unusual, guys. Okay, and what we have seen also that the higher treasury yield also a bearish signal for gold. Why? Because if I'm the investor, I'm getting 5% from US government by loaning my money into treasuries. Why would I buy gold? Because gold is basically a non-interest bearing asset. Okay, my only hope to get return is from price appreciation. So there's a less chance for me as an investor to put my money into gold. I would rather put my money into a bond market to get 5% return risk free. Okay, since 2008 we have seen the gold has been outperforming the government debt. Okay, it has gone up by 160% since 2008. So what does it tell you? It tells you that since 2008, the confidence on the investors in terms of getting returns, secure returns from the bonds has not been there. And maybe this is the reason why the capital is moving into gold this year. That could not be the only justification. Let's further dig into it. If the US dollar, treasury yields, GDP growth, and the US economy are all considered firing on all cylinders, why do you think gold is rising for? The only explanation I could give you is geopolitical tensions. But is this the only enough justification for gold price hike? And gold has been outperforming S&P 500 in 2024. Let's further look into it. So we have seen there is a lot of uncertainty in the global markets. Okay, we have seen tensions between US and Russia and China, the war in Middle East. All of these things are creating a lot of uncertainties in the global economy, and the central banks has been piling up gold for the past year or so. In this year alone, like in 2024, the central bank's purchases hit 794 tons of gold. Okay, this is the third largest in this century, and these same central banks have been calling for a soft lending scenario. China has been piling up gold like crazy, and not to mention the Bitcoin rally as well. So Bitcoin and gold traditionally they don't rally together, but in 2024 they also rallied together. But that's also another sign of anomaly in 2024. So what does it tell you? I think it gives you a lot of mixed signals about the market movements, and it's hard to predict where the market will move in 2025. We have seen a lot of economic data, and most of the time the economic data says something and the market does something else.
When it comes to investing, staying informed is everything. That's why I've been diving into Mumo. It's got some tools that are pretty useful for navigating today's market. For example, Mumo gives you free access to real-time level 2 market data, advanced charting tools, and professional-grade research. The kind of stuff that you usually pay extra for on other platforms, like Questrade. And let's not forget the low FX fees. If you are trading in the US stocks, like myself, I don't trade TSX. Those savings can really add up over time. Pair that with the insight that you're getting, it's a game changer for making informed decisions. Plus, while you're waiting for the right market moves, your idle cash earns a solid 6% annual return through their Cash Plus feature. That's a nice bonus. So whether you're trading actively or just keeping an eye on the market trends, Mumo is definitely worth a closer look. So you can start investing today by clicking on my referral link, which will give you $50 free credit to start with.
Thank you, Mumo, for sponsoring this video. Nothing from this content should be deemed as a financial advice. Please consider all the risks associated with the investing. Terms and conditions apply. Well, as a prudent investor, we have to keep an eye on all these macro fundamentals, especially the US dollar, because the US dollar is the global reserve currency. If it gets expensive, if it gets stronger on the DXY, means it is going to create a lot of trouble for the global economies, especially the emerging economies, because it will put a lot of pressure on the other currencies in the world, which will make their imports expensive, which will make their dollar-denominated debt expensive, which means they will need more dollars to service their debt, and they will need more dollars to import their commodities. So this will have major repercussions upon the global economies. And if the global economy is going to struggle as a result of stronger dollar, then there is a less chance that the US economy can continue to grow while the global economy is going to struggle big time. Again, I'm not predicting anything, but what I'm telling you is all of these macro fundamentals that you can keep an eye on them to make sure you understand your next move and you make an educated decision about your portfolio going into 2025. And still, we don't have a lot of clarity from the US government, how Trump's policies are going to shape up and how this is going to impact the global economies, the tariffs, and overall geopolitical tension when it comes to dealing with the US and China and Middle East, and also now acquiring Greenland, Panama Canal, and Canada. I don't know how this is going to impact in 2025. If it's a recessionary time, then we have to go risk off. If you think that the government is going to put a lot of stimulus into the market, then of course we have to consider risk on strategy. But anyway, you let me know what you think about that. Put your comments down below. If you like this video, give me a thumbs up, subscribe, and I'll see you in my next video. Take care. Financial education is very important for everybody, especially for the kids who are still at school, because when they grow up and go into the professional lives, if they don't know how to manage their finances, that is going to be a disaster to begin with. I have just published an ebook for the kids aging between 10 and 16 years to understand how they can manage their finances. So when they grow up, they know exactly how to manage their personal finances, because I have broken it down at a very, very basic level. What is money? How can we save? How can we invest? What is debt? How can we use debt? What is credit card? And how we can set ourselves for the financial future when we go into our professional life. So if you are a parent looking for a very simple to use ebook for your kids, click the link below to order the copy for your kids, and let me know what you think about that. Let's get back to the video.